Stocks mount a rally in the face of Fed and recession fears, and with sentiment so bad, we debate that with the investment committee today. Joining me for the hour, Carrie Firestone, Jason Snipe, and right here with me at Post 9, CNBC's Jim Cramer, Joe Terranova. It's great to have you guys here. It's great to see everybody. Let's check the markets here. Just past 12 noon in the East, it's a mixed picture. We're not doing all that much because I think we're still kind of in a wait and see for next week. But, Jim, we do, I feel like, have a Santa versus the Grinch feel. Evercore today says, here comes Santa Claus, superior technical position across asset classes. CNBC's All-America survey, people are hating on stocks. Just 26% of the public believe now's a good time to invest in stocks. I've got seasonality versus sentiment. What wins out and why?
I thought that was a fantastic piece, the Here Comes Santa Claus, because it dovetails very much with what I've been saying on Squawk on the Street, which is that every morning I get up and I see multiple pieces that are negative, very few that are positive. I mean, Joe, you know, the research right now is probably about as negative as I've ever seen.
It's ugly. Santa Claus isn't going to every house, is it?
No, but I mean, Hanukkah starts next week, and you get a little front run.
Okay, but Santa Claus, you know what Santa Claus likes? It likes the blue chip stocks.
Well,
it likes McDonald's, it likes UNH, right. It likes Merck.
Well, I'll tell you, Santa Claus got good taste, because what I see are so many stocks that I want to buy. I mean,
you do? You see a lot of stocks you want to buy?
I see individual stocks. I'm not going to give you the broad, I like everything here. Right. But I just feel that the negativity is so great,
Oh, it's
Scott.
pervasive.
It's like I got up, I said, all right. I mean, we're going over it with my investment team. It's like, hey, MongoDB. Oh, there's one, finally. That's a good one. I mean, no. Well, how about the other 72? No, don't touch it. Oil. I mean, today, Coterra, okay. We announced a deal last night with the United Kingdom, where we basically have, giving them half their nat gas. Mm-hmm. Coterra is our best nat gas company. So what does that happen? So Citi makes it a sell. A sell. Oh, well, that's important. A sell.
I mean,
where were they with the sell with the Roku at
Let's forgive people for feeling kind of negative. I mean, what are they supposed to feel? Yield curve massively inverted. The commentary from corporate America stinks. Jane Fraser, Citigroup CEO, at those conferences that are going on just a few minutes ago, now in a phase of rolling company recessions. You hear that kind of talk. Well, you heard Solomon yesterday, Moynihan, Diamond, et cetera, other than Kirby of the airlines of United. What are you supposed to feel?
Well, look, I listen to those comments, and I say these people should be a little more measured. Because what happens is there is such a thing called confidence. And if you come in and you're a member of a team, you're a coach, like the Giants last year. Let's just use football for a second. And they had a losing mentality. Same guy comes in, new guy comes in, same team, right? Dable comes in, same guys. I said this to him, and suddenly they're winning. See, you can create an element of negativity. These people do not seem to know how important they are. They don't seem to know how they can set the tone. I can't tell you how many people decide not to make a purchase because one of the richest people in the world, Jeff Bezos, told you not to. Not make purchases.
Do you think, in some respects, they're talking their way into a recession?
Right, and we don't have a president who has even one whit of common sense about the stock market. So it's not like he's going to say, nor does he care. I mean, the stock market is a playground for the rich for him. But these people don't seem to know their import. And you know what, Joe? I'm sick of it. I'm sick of it because they get away with it. They make tens of millions of dollars. They have the capability of creating a narrative which just says, you know what, if you're careful, you can still make money. But no, what they basically say is it's really awful. If they say it's awful, you feel like a fool if you want to take advantage of an opportunity that you like.
Carrie, I've got Santa versus the Grinch. Fight to the finish, as I said, at least of this year. Who's going to win out and why?
Well, first of all, Jim, it's great to see you. I wish I was there in person. But I'll tell you, I agree with you that Jamie Dimon and Brian Moynihan don't have to say, essentially, that the consumer is an endangered species. Now, I don't think that Jamie Dimon used that word, endangered, but it sounded that way. And in fact, what we should be hoping and what we are seeing is some signs that inflation is coming down and the Fed doesn't have to keep raising. And they have said that they're seeing signs. Look at housing prices. Look at Target's results. We know the dollar is weakening. We know China is starting to open up. There are signs that are better. And the market is not up for the year. It's down 18%. So there are stocks, as you said, that are attractively priced right here. If we look at just the compression in multiples, And, I'm not trying to be Pollyanna and say things are great, but just look at multiples. There's a chart that we put together this morning, I think Kara or Vinny did it, that shows how much growth a year ago, November of 2021. Average multiple of the top 20 mega caps was 28. Now it's 21. If you look at the rest of the S&P, it went from 19 to 16.8. So the compression in the large cap stocks is tremendous, and that they were too expensive. And that doesn't mean that you have to keep assuming there's more compression. We are going to get through this.